All right. Hey, good morning, everybody. Thanks for dialing in. We'll just jump right into it and get started. If you got questions, use the chat function or text me, and I'll do my best to get them answered. Okay, here is a chart of soybeans. Last week, what we talked about is soybeans being sideways to lower off of a corrective pattern off of this top right here. It looks like that is going to fall away today and probably set up another leg higher, to be perfectly blunt. So, okay, this is the crop report day right here. This big up day. We traded. Um, we actually traded lower after the crop report than we were before it came out. So we actually had a bearish reaction to a bullish report, which could have turned really, really ugly. And then the next day we have this huge down day, right? Where beans were down. I think they were down 35 cents at one point. But after that, we had zero follow through. If you look right here, the low of this day at 334 and a quarter held. It never was even seriously challenged, and we've kind of ground ourselves back higher. Same with this reversal day right here, which was Friday. We took some risk off the table on Friday, traded lower, and we couldn't hold below that low. So ever since then, we just keep working higher, and it just keeps getting bought. So at this point, it and you'll see this with corn. It definitely looks like this 77 level is going to get taken out, and it looks like we're going to accelerate on up. First target past that is 1110. It looks like we could easily uh, challenge that level. But I do want to throw some caution here, because these divergences that are on these lower indicators are worsening. They're just continuously repeating. So we've been diverging since this peak was made. Here's the first divergence. Today, at a close at this level, would confirm a third divergence. And every day we continue higher with these indicators down here failing to get new highs. Every day is just a new signal, and that signal stays valid until 1110. So why would it just continuously diverge but yet work higher? And I want to show you that on the weekly chart here, because when I switch this out and move the time frame to the weekly, what you're going to see is that we're just warming up. This market, here's your 1080 level, which is all the way back here at the 2017 high, and here's the 18 highs right here at this 1070 level right in here. There's 1080, which is exactly where we stalled before. Guys, if we get above this 1080 level, there's no chart resistance until you get, I mean, maybe there's a little bit at 1130, but really there's no resistance until $12. And if you look at these lower indicators on the weekly chart, you will not see any divergences on the weekly chart. In fact, if you go back to 2016 and look at this trend that started at 850, now I've been equating this move to 2016 since the beginning, because we started at the same level and we have almost identical trade action coming up out of it. If you look at these lower indicators, just follow the lines, we have not yet reached anywhere close to where these indicators reached on this uptrend. So on one hand, the daily system, right, the daily indicators are diverging and they're kicking sell signals out left and right, and the market just keeps ignoring them. Why is that? Well, probably because this weekly chart isn't overbought yet. It's still got some room to go, and if we can get on top of all of this support, then the downside becomes limited as long as that support holds. So if you're a fund and you've been buying the tar out of this thing for the last $2, and you look at it above this level, you have no reason to sell it unless we break and take out this low down here. So the funds have $1 to give, and as long as that 1080 level breaks here soon, that could ignite more buying, even though we're diverging. So what do you do with that? Oh shoot, I'm on the wrong chart. So I'm gonna go back to the daily. So what do you do? And where do you go? Right? That's the question. And I think the answer is you should be at least 50% sold cash at this point in time. Basis is good. Futures are the highest we've had in years. Everybody's trying to heal up a little bit from the train wreck that have been beans for the last 3 years. So I think the prudent move to make is to be at least 50% sold. Enjoy the ride on the rest of it. We're going to sell it if it gets up into this 1110, 1120 range, right up in here. We're going to sell it. And then we're going to wait to re-own until we get that pullback. Maybe we'll blow all the way up through 12, but that's okay, because if we do that, then we'll start selling next year's stuff, right? I think you want to be a buyer of breaks on this in this move, not a seller of cash and a buyer on the same day, if that makes sense. So bank your profit. You will not hurt your farm taking cash sales up in here. Let it ride more, sell more going into the future, and buy significant breaks going into the winter. There is news circulating, and that South America might need to buy beans from us, and China might need to buy more than they've previously been talking. And if that materializes, then our balance sheet gets really tight really quick, even before a yield adjustment by the USDA. So if the USDA adjusts our yield and we have continued buying, then this market can get absolutely stupid quick. So I'm going to pull back and show one more time frame, because I want to look at the monthly chart too. This is a move that should be looked at in really broad perspectives, right? Because we're finally taking some stuff out that hasn't been violated in a long time. Here's that 2018 high at 80. Here's the 2016 high at 12. So if you look at the monthly chart, there truly is nothing between 1080 and $12. There's very little there. I don't know if we have enough to get there at this point, but we could. And guys, if we get above 1250, look above it. There is nothing, very, very little, and we could flat out get stupid with this market if it were to violate that $12.50 $12.50 level. We could truly get crazy with it. I don't think that's going to happen right here. I definitely think there's going to be a pullback before that happens, because markets do not go in straight lines, and they have a tendency to get everybody sucked in, get them overextended, and then kill them. And we definitely don't want to be in that camp. So sell cash on the next move higher, sell more cash, and then buy dips going into the winter to reopen that upside. And I wouldn't do anything with new crop yet unless we have an 1150 or 12 handle in front of it. Then I think it makes sense to start laying off some of that new crop stuff. So what is the reason that beans could just keep on trucking? Well, it's because of this sucker. Corn just keeps on going. Last week we talked that we thought that that a top was probably in, because we keep getting these repeating sell signals. We keep getting these divergences down at the bottom. But like beans, they just keep moving higher. Yesterday we made a new high. This morning we've made a new high yet again. And we've now violated levels that haven't been breached in a couple of years. So let's do the same thing with this one that we've been doing with beans. Let's take a look at the weekly chart. Here's your weekly chart, I'm going to add an indicator here. I'm going to add the cloud because, and this is really significant. You can see we're now in week 2 above this cloud. For those of you that have listened to me for a long time, you'll know that I've gone back for 40 years on corn and measured when you break the weekly cloud on a closing basis, what's the move? And it doesn't happen very often. It looks like it's happened a few times here. This is the bulk of the activity here in the last 3 years, and they've materialized with some gains, but not significant. If you go back 40 years, your average move on a close above this weekly cloud is $2 a bushel. And here we are in week 2. Now, if you're doing the math, that is a six handle on the front of corn. I'm not saying that that's where we're at, but the recipe is there if we stay dry, if South America stays dry, and if beans get stupid, then you've got that acreage war, right? Where corn has to decide if it's going to give acres up to beans or whether corn's going to buy acres and maintain its acreage base. And if beans are at $12.50, $13, there's only one way for corn to secure those acres, and that's to be higher. And then God forbid we get into an actual weather problem next year, because then we would truly have very, very tight balance sheets. So I don't want to put the cart in front of the horse, because on the daily charts we have divergences. We have 13 signals, we have repeated 13s, we're hitting Fibonacci targets, we're exhausting about everything that there is to exhaust, but we just keep ignoring them. So at this point, what we're looking for on corn, we could get another gap on corn, and this would be a breakaway gap. And then if we get another gap, that could be a measuring gap, which could actually double this move that we've already had. If we get a gap, it would be measuring or exhaustive, one or the other. Definitely with these readings, we would first consider it to be exhaustive, but we can't rule out the possibility that we would get a measuring gap even up from these levels, and really shock everybody with an explosive move higher. So I can't rule that out either. So what do we do? How do we trade it? Well, we're going to sell cash. Cash levels are the highest that we've seen since 2014. We're selling a lot of 450 cash corn down here in South Central Kansas, and we're selling really good levels everywhere we go. So we're going to get to at least 50% sold, if not 2/3 sold. As we keep working higher, we're going to sell more. As we get even higher, we're going to start laying off risk into next year. We're going to leave our upside open, but we're going to take risk off. If we are to break and we collapse and these divergences confirm and we start a wave lower, we're going to be really happy we made the sales we did, and we're going to buy it on a break because we want to own it getting into that January, February, March timeframe, because we just don't know what could happen, and we've got to respect the market that we're in a situation that doesn't happen very often. So we want to be really really open to the possibilities that it could throw at us. I guess the one other possibility that's there, and I do not think this is what's going to happen, but we can't ignore it, is that after the elections, depending on who wins, we go into a lockdown. We tighten restrictions, we go back into a lockdown, and we shut this economy down again. And from these levels, if we start shutting things down, I think that would be a very big problem for these grain markets, and we would see radically lower prices very quickly. So don't get overly bulled up here and say, I'm just going to hold all my cash and I'm going to buy the board and we're just going to own everything because we can get downside risk in this market. If you read the analysts, virtually none of them are talking about lower prices. There's a few that are talking that maybe we're overbought, but for the most part, they're getting pretty bulled up, which is a concerning thought to me, and I think warrants caution. So sell some cash, pay off your notes, enjoy the ride higher, sell more every 25, 30 cents, and then get ready for the winter because I think it could get really explosive. All right, now let's look at wheat. Wheat's got a pretty good story going on, right? It's got Russia that is talking about increasing state reserves. It's got countries all over the Middle East talking about increasing state reserves as a hedge against inflation. Wheat has dryness all over the U.S. And with guys struggling to get their crops in the ground. So the recipe for wheat is there for it to continue on higher. And unlike corn and beans, there is no divergence on these charts. Beans are in an uptrend. There's absolutely there's a 13 here and there's a little resistance here. But if we close above 580, then there's no end in sight and there's no way to guess where this market might go. It could extend on higher. It can also fizzle out here and break. I mean, we are overbought. There's no question, but there's no end in sight to where we could end up. So I'd be very, very patient with wheat. If we start, creeping up above that $6 level, next July is trading 585, 590 is where July wheat's trading. If that starts creeping above 6, we'll just have to see where it goes. But I wouldn't step in and sell this market just yet. But we could be close, and certainly a move back below 550 would get our attention to the downside. All right, that's what I've got for you this week. I hope that's helpful. If you have questions, please call. Don't feel bad about making some cash sales and missing the blow off, missing a top. Don't feel bad about that at all because you're making good money at these levels, and definitely compared to where we were in early August and July, I think we should be elated with what we've got. So I hope you guys have a great day, and I'll talk to you next week.